In this video, we're going to talk about the moving average envelope, better known as the MAE. And all it is a three-line technical analysis tool. It uses a moving average and an upper and a lower band. And those bands, they sit a certain percentage away from the moving average that you're using. Now, when you think about the word envelope, you would think that the price should be surrounded by the upper and lower bands. And in the stock chart of Moderna, I'm using a 3% band and a 20 EMA. You can see that's not the case. And we're going to talk about why that's the case later on. So what does the envelope tell you? Well, people use it for three main uses: to confirm the trend direction, showing an overbought condition when price is at the upper band, and at the lower band, looking at an oversold condition. Every trader's got to define their own rules around that information to enter the trade, to manage the trade, and to exit a trade. And the key thing to remember is these envelopes do not adjust to volatility. We're talking about the settings. With any technical tool like this, the common question is, what's the best setting? And the fact is, in regards to this indicator or any other indicator, there is no best setting. There's no universal best setting, period. And a lot of people just use the default one as a starting point. And the standard settings for these envelopes is a 20-period moving average and bands set to 5%. You can use an EMA or you can use an SMA for the average. When you use an EMA, it just allows the indicator to weigh the more recent data heavily than it does the past data. And be honest, the default may be fine for some instruments, okay, but it's not going to serve those that have volatility that's pretty high. And that Moderna chart, that shows price heavily into overbought territory for over 32 bars. So you're going to have to experiment with different settings and even different time periods so that the bands have some interaction with the movement of price. This is an 8% band. Okay, there's a lot of different combinations you can try, and to have some sort of consistent way to adjust the settings, just use Fibonacci series of numbers. After the 8%, maybe use a 13%, for example, 21%. So you can see here with the 8%, it's a 20-period EMA, it actually interacts better with the ebb and flow of price of Moderna, except when that 90% run up in price happens after that gap up. So one of the biggest uses of any moving average is trend direction. And using the envelopes for that's no different, because now we're going to use the slope of the envelope. And that's going to give you an objective determination of trend. So when you see the envelope sloping to the upside, uptrend. Downside, downtrend. When you see it moving sideways, you can consider that a trading range. And a trader will also use the break of the upper envelope or the lower envelope for trend confirmation. Now, this is obviously going to depend on the percentage that you use, because if you have too high of a percent, so you have a wider envelope, you may never see the sides get broken. If it's too low of a percent, you can see whipsaw. So again, each trader is going to have to determine what their own settings are based on their trading needs and the instrument that they're trading, which is why there is no best setting. So how do you trade with it? One of the common ways to trade with it is the price breaking out of the envelope. Considering that would show strong trend direction in that direction. Break out through an upper envelope, look at buying. Break down to the lower envelope, it's a sell. The key is that the percent that you use, it's vital to ensure that you're not entering at the tail end of a strong move up in price. So here, I set the bands to 5% and just played with a 10-period EMA. The arrows are showing breaks to the upside. And I think you could agree that taking those trades would be a painful way to trade during this period. So the question is, can you adjust the settings? And you absolutely can. You can optimize using past data on anything, really. It doesn't mean you're going to get better results, though, okay? Because the biggest issue with this is the envelopes don't have the ability to account for changes in volatility. And if you're using breakouts as a buy setup or sell setup, how useful that is going to depend on what percent that you're using as a setting. So what about oversold or overbought? Okay, well, let's consider that instead of buying the breaks of envelopes, we consider the bands as an oversold level or overbought level. So this is where we want to look for a reversal of price. In this example, it's a 20-period EMA, 5% envelope. This stock does have some opportunity to short it. And how you're going to enter it is going to depend on what type of entry trigger you're using. But you can see over on the right side The price remained oversold and gave almost zero traction to the upside if you're buying. Here's a strategy that might be of interest to you. It's called the Pearson pullback strategy. What we need to see is, number one, we need to see price break the high or the low of the envelope. Second thing we want to see is price to pull back to an area around the moving average, and obviously there's some subjectivity to that. You want to look for a setup in the previous direction. You want to manage the trade upon return to the envelope, where you might want to take profit. You might want to adjust your stop. You may want to scale out. And the last one, if price travels to the opposite side of the envelope, we cancel that trade idea. So this is Goldman Sachs. And you can see price breach the envelope. This would be your signal to start looking for price to move to around the moving average. And I used various types of entry triggers here. Simple trend line breaks are fine. Breakouts are fine. All of these trades had positive price excursion. All of the long trades came back to the upper envelope. What I did leave out is stop loss placement. There's so many different ways you can set your stop. You can use the average true range. You can go above or below the candle that gets you into the trade. There's just so many different ways you can do it. And I don't need to go over that in this video here. So my conclusion, the moving average envelope, it's static, which means it does not adjust itself to the market. As a trader, you're going to have to continually make adjustments depending on the instrument that you're trading. If I'm using any sort of band such as this, I prefer a volatility-based approach. And I'll use KELTNER channels, because this way, that width of the bands is going to adjust to market conditions. And you can learn more about a KELTNER trading strategy in this video right here. Hope you enjoyed this video. Hope it gave you some insight into this tool. Is a good word for it. Make sure you hit like, subscribe. We'll talk to you soon.